Hello, Land Talker subscribers. Jim Rothermich with Iowa Appraisal in Des Moines, Iowa, and Land Hero. Um, I have started Land Talker TV here recently to talk about anything that affects land values indirectly or directly. And that's the reason why I do Land Talker TV. And I talk to different types of guests that are involved with the real estate industry. And today I'm excited to have one of the most popular ag bankers in Iowa, Josh Williams of Luana Savings Bank, here in Clive, Iowa, which is Des Moines. Josh, welcome to the show.
Thanks for having me, Jim.
Absolutely, Josh. Well, I tell you what, you are a very active ag banker here in the state, and I know you do a lot of ag loans. So let's talk about yourself. Kind of tell our listeners about yourself and talk about Luana Savings Bank.
Yeah, thanks, Jim. I grew up in southwest Iowa, a town called Villisca, Montgomery Page County, and I am a fifth generation family farmer. My brother's down there still to this day. He raises hogs full time, and then him and myself, we actually run our row crop operation 50/50. So I get down there as much as I can in the spring and the fall and help out. There's some days I enjoy spending time more on the tractor than in the office, which is kind of nice.
Yeah.
But just a small operation, 400 acres, corn, soybeans. And then on the hog side, it's not confinement. My brother actually raises free range pork through Nyman Ranch. So, company out of Colorado that in California that they buy free range pork. It's not organic, but it's outdoor raised, more humane, hoop barns, outdoor fishing, that kind of thing. So I grew up around that. I went to Iowa State, graduated in 2009. I cut my teeth in the farm credit system, working for AgStar in Minnesota for a couple of years. And then I always wanted to get back to Iowa, closer to home, closer to family, closer to friends. And I had a recruiter reach out to me about an opportunity in the Des Moines area. This little bank in Northeast Iowa, in a town of 300 people in Luana, Iowa, they were building a brand new branch in Clive. And at that time, they had had four locations, three in Northeast Iowa, and they were building a brand new one in Clive, which is where I'm at today. Um, Funny story. So I'm going to elaborate on this a little bit, but the CEO at the time, who's still the main shareholder of the bank, Dave Schultz, wanted to meet me. So I'm in Minnesota. He's in Northeast Iowa, quite a ways away. And he went out of his way and met me on a Saturday morning. I drove about 2.5 hours east. He drove about 2 hours west. We met in Albert Lee, Minnesota at a Perkins restaurant at 10:30 in the morning. And that was my interview. So very down to earth. I mean, he grew up on a family farm, actually operated for quite a while. Um, but I ended up taking the job, started in December of 2012, and been there ever since. So it's been a good thing for me.
Absolutely. I know you guys kept us busy there when that market was extremely hot. Oh my gosh, that was some pretty wild times there after COVID hit, when people wanting to buy farmland and um so well that's really neat. You've been there over 10 years, sounds like 13 years and
Yep.
um uh tell us a little bit about Luana Savings Bank and their space in the ag lending. And, I know they do, well, they even talk about, commercial and the residential lending that they do.
Yeah, we're a full service bank, been around since 1909. We've got over 2 billion in assets, which makes us, I think, the 12th largest in the state, the sixth largest ag lender in the state. We're not really, we don't advertise a whole lot. Our employee base is pretty limited. I'd say we have less than 100 full-time employees and only six locations. So what sets us apart? Well, it's the low overhead, it's the less brick and mortar. I always use this as an example, but when I go out in the countryside, I mean, I'm the sales guy, right? I'm the one meeting with the customer, gathering their financials. And then on top of that, I'm also the underwriter. So I do the credit analysis, I break things down. And we have a department that helps us on the analyst side, which is very helpful on our end. Sometimes I do the appraisals. Typically, I like to call yours truly to get those done for me. But in some circumstances, we can do in-house appraisals as well. And then I'm also the closing agent. So I handle the transaction from start to finish. I work with the attorneys. I get the title opinions ordered. I get the appraisals ordered. I work on the numbers for the closing statement. At some locations out there or competitors, I mean, you're talking that's like four different individuals for four different jobs. But I wear that all in one hat and do that all for the bank under one roof. So there's some stressful times. I know back
Yeah.
in 2021, back when rates were low, farmland was just about to, pop as far as go up on that end.
Mhm.
And we were doing a lot of deals, Jim. That was kind
Oh,
of
I
the
know.
crazy time of year.
Oh,
So
did you ever have any time off back then? Because I didn't.
I think in that month of December, I closed over like $21 million in loans. I put 50 million on the books that calendar year. And yeah, there were some late nights and some early mornings. Some great opportunities too for guys to buy farm ground looking back, and I'm glad they did. So,
Yeah, how low did those rates get back then, Josh?
well, if you follow the treasuries, I mean, we were down below 1% on the treasury market. So if you had about 200 basis points to that, there were some loans that we were offering honestly in the twos, which sounds kind of crazy at the time. I'd say a threes hit a lot of the mark on that end. But what kind of sets us apart is a lot of banks can only go out 5 years on a fixed rate. We can go out to 10. So that mitigates a lot of risk for some customers knowing that they can sleep at night, that their rates aren't going to, mature or balloon for a longer period of time. So kind of crazy looking back. And some of those rates, you look at them now and you're like, holy smokes, now we're in the sixes. So interest rates drive a lot of the market these days.
Right. Sure. No. Well, as somebody that keeps track of the land auctions here in Iowa, um, that market, exploded when, after COVID hit. And uh, based on my auction data, it went up over 50% in less than 2 years. And when it started cooling off, is when interest rates started going up. And
Mhm.
um, talk about, where interest rates are today and kind of elaborate on that, and then talk about, where you think it's going, and just let's just talk about that.
Yeah, good question, Jim. Um, interest rates are in an interesting position right now. You look at the short-term market, the Fed or the prime interest rate, we're inverted at the moment. We have been for quite some time. So what that means is your short-term money is higher than your long-term money, and that's not supposed to be that way. Typically, long-term money should be a higher interest rate than short-term money, and people need to realize that the Federal Reserve or those in Washington, D.C. that, determine those Federal Reserve rates, that impacts your prime, that impacts your credit card rates, your auto rates, your short-term money, your operating loans. And then the long-term money, which we work off of the treasuries, that's going to be dependent upon the market. So, your stock markets, the market, the economy, all that fun stuff. So there's a lot of different factors at play. If anybody were to ask me if I had a crystal ball, and I wish I did, I would say, the consensus is rates are going to come down at some point. It's just we don't know when. The biggest factors at play right now, I would say, are obviously the tariffs and the Trump administration. And what kind of drives the Federal Reserve's decision making is probably inflation and the unemployment rate. And they haven't moved their rates for quite some time since last year. I know they just met here a week or so ago. But if I was a betting man, I'd say things will probably soften at some point. Um, but maybe some of more of a flat line as opposed to a drastic decrease, if that makes sense.
That surprises me to hear that those long-term rates are higher than the short-term rates, because there's more risk involved with those long-term rates.
It's kind of crazy. And like I said, those treasuries for a while, they were back in 2020, 21, they were extremely low. And everybody and their mom took advantage of refinancing. I mean, you look at home mortgage rates, they're in the twos that people had locked in. Like I said, some of my farmland rates were down in the twos and even the threes. So it's really hard for guys to liquidate those assets now because they have such fantastic interest rates on those. So I can understand why they wouldn't want to at this point.
Sure, sure, sure. Well, as we've you know, when I was measuring the market last year, we was coming into the summer and fall, and the note sales started popping up, and I thought, this market's man, it's adjusting, and it's down 10% from the peak, which I think is remarkable. That's it for the the way corn prices and soybean prices have done. But then, once everybody got their harvest in, most people were really happy with their harvest, and then it seemed like most people were happy with the election. That kind of stabilized things. And then after we got in first year, things just got solid. I'm not saying it's increasing, but just very solid, just still seeing some strong prices. That, I always talk about one way to measure how good the land market is in Iowa is how many sales are north of $20,000 an acre and higher. And so we're still getting them. They still pop up every now and then. So the market's just kind of rolling on, and it seems like interest rates are higher than they have been, but it seems like it really hasn't affected the land market too much. You want to elaborate on that some?
Yeah, that's a really good point. I mean, there's a lot of cash in the market out there. So um, I would say land wasn't always the sexiest investment, going back 30 and 40 years ago. It was just kind of one of those things that you inherited, and you also inherited the debt with it as well. But now it's one of those tools in the toolbox that a lot of investors are utilizing to diversify their portfolios. So you look at any realty company in the entire state of Iowa or throughout the Midwest, they've got an investment arm where they're working with, out-of-state investors or somebody that wants to get their hands on a good investment. And Iowa farmland, that's it. I mean, it's the creme de la creme. It's the top of the tier as far as I'm concerned. And the high quality ground, it's always going to bring high quality money. I mean, you've seen that, Jim. The A properties are going to bring A money on that end. I've kind of seen a little bit of a drop off on the lower end market when it comes to, like your pasture ground and your below average ground. And then you get into the timber market and the recreational market. And that seems like that's kind of exploding as well. So I would say my average customer that I work with, they work 8 to 5. They live in the Des Moines metro, and they want to buy something within 2 hours of the Des Moines metro where they can go down and they can hunt, they can shoot a deer, they can, use a bow to kill a turkey and put up a machine shed house, have somewhere to lay their head at night, bring the four-wheeler down there, bring the kids, fish on the pond, buy an 80, buy a 120, something like that. And that's become a really hot thing right now, especially since COVID happened.
Yeah, yeah. No, that's the same thing I'm hearing from the guys that sell that recreational type property. They told the same story that I did. I'm more talking about cropland.
Mhm.
And but they was saying, after the first year, man, it just people were just excited about buying recreational land, and there's plenty of cash out there. I think that's something that that's one thing that was always interesting to me is, when that market was hot, and even today, when I call up and confirm those auction results with those realtors, they might say, that the buyer paid cash for that farm, or the buyer paid most of it cash and borrowed very little of it. Um, how much cash is still out there? I'm hearing there's a lot. Can you comment on that, Josh?
Yeah, that's a really good question. And I hesitate to know exactly what the answer is on that, but it sounds to me like there's quite a bit, especially in that recreational market. So, your question before about interest rates, if that's affecting the market, I think it is to an extent. But with as much cash as there is out there from our investor pool and our buying pool, I mean, they're not even borrowing money on that end. So obviously, our government payments that got pushed in the market during COVID, that really helped things, I think, for our farmers and allowed them to purchase assets, whether it's a certain kind of a capital size, whether it's machinery or iron or land, obviously. Um, but I think there was $26 trillion pumped into the economy during COVID, and a lot of that was towards our our ag producers, which needed to happen, I think, to an extent, but it also kind of inflated our market, in my opinion. But yeah, I've heard a lot of sales, especially in that southern Iowa market, that is kind of your hotbed for white-tailed deer country, where these big tracts are selling for 6, 7, 8,000 bucks an acre, and they're not borrowing a dime. So I don't know. Obviously, a lot of these guys are, out-of-state landowners that make their money elsewhere, but they just want somewhere to go. It's the same thing as buying a lake house in the Lake of the Ozarks, where, instead of going on the boat and, maybe having a fun time on the lake, they're going to their oasis or their retreat in southern Iowa and they're shooting a deer. So,
Yeah. Well, I tell you, something that I think is interesting is, you go back 10, 15 years ago, those barn dominiums, there wasn't many of those around and they weren't very elaborate, but man, now, holy cow, there's some nice stuff out there.
yeah, they're
And
everywhere. Yeah.
and just impressive. They have a huge shop in there that's finished, and the living quarters are just fantastic. And and there's a lot of that around when you start traveling around and appraising those farms, and they're just very popular anymore.
And that's even
And
becoming kind of a new age of income for those landowners is the rental market. So they can Airbnb those places out. They can, put it on VRBO, or they can just work with a local property management company that they want to, sell it for a week at a time or a month at a time. And, they've got plenty of demand from guys that want to come in and go on these retreats. And there's even guys that are starting new companies where they have guides and enough ground that they can actually manage and lease and or own. And then these guides walk them around, and it's a hunting retreat, and they got these nice cabins and these nice places to stay, and it's pretty neat actually. Some of those spots down there in southern Iowa.
yeah, that's I've seen some really nice, people call them shouses, shop house
Mhm.
combination or barn dominiums. Um, Man, it's just amazing how that has changed and how nice some of them are. It's very, very cool, and never imagined anything like that. So well, Josh, you know, if somebody wanted to come in and borrow money for a rec farm or a crop farm, what is the process to do that? Can you kind of go through that?
Yeah, that's a good question, Jim. I think a lot of our customers, they're used to um, they own a home, so obviously they're used to the underwriting standards of what they work with on a home mortgage from that perspective. Some of those deals that they can get it for 5 or 10% down, and they can get a 30-year fixed rate through Fannie Freddie, sell it off on the secondary market, and get a very, very low subsidized rate. Well, there's a little more risk involved when it comes to agri-commercial loans. So we are unable to lock in as long of a rate for that. And we would keep that rate on our own paper and not sell that off, obviously. But I would say the typical standards for any kind of farm mortgage would be in that 20 to 35% down range. And that kind of depends on the quality of the tract. So your higher priced farms, we're obviously going to need some more money down or collateral to make that work. Some of your lower cost farms, which, when I first started in 2012, there were farms in southern Iowa selling for less than 2,000 an acre. Well, now it's 6, 7, 8,000 an
Yep.
acre. So
Yep.
we're still looking probably, like I said, in that 20 to 30% down or something like that for recreational farms. Um, and then as far as underwriting standards, I try to make things as simple as I can for my customers. So a balance sheet, if those people that are listening right now, what is a balance sheet? What's a personal financial statement? It's basically an application. It shows your assets and liabilities. It shows what you own and what you owe. So the more information on there, in my opinion, the better, because we at our bank, we actually determine our rates off of owner's equity position. So the stronger your balance sheet looks, so the more assets you have, the more net worth you have, the better interest rate I can provide you. So I've had some instances where customers are unwilling to share all their information, and I have to ask some hard questions to get to that point. And once I get that information, it's like, oh, well, that rate that I was going to provide you before, well, now it can be a little better now. So that's a good thing for you. And then as far as financials that we need for income verification, typically W-2s work for a non-farmer. But if you do get income from some other sources, tax returns is the saving grace. So a full complete tax return that we'll need, and then a balance sheet will pull credit on you. So we'll need a social security number and a date of birth. But I try to make things very simple for my customers as I can. I don't like to get too much into the weeds as far as needing all the information under the sun for something like that. Because a lot of days in this day and age, when guys are looking to buy something, they want to move quickly. And, it's my job to underwrite that process and get it done as fast as I can on my end so I can get back to them and they can buy that farm.
Yeah. Yeah.
And then on top of that, I guess from a farmer's perspective, there are some other options out there for young and beginning farmers. So FSA, the Farm Service Agency, for those of you that don't know, they offer financing in all 99 counties, and they've got offices in all 99 counties. And a lot of kids that want to get started, myself included, I actually went through the process back in 2014 and again in 2018. But there's a really good program with them called the Down Payment Program through the Young and Beginning Farmer. And typically it's a 5% down in cash. The mortgage holder on the first lien, like for our bank, for example, would be at 50%. And then FSA would finance the remaining 45%. And that 45% loan with FSA is locked in for 20 years at 1.5%. So it's a very favorable interest rate. It allows our young farmers to kind of get started and build some equity on their balance sheet and get started. So a high recommendation from me would be to, if you are somebody that wants to get started in that process, is talk to those guys. And we obviously work with the FSA in conjunction with them as far as underwriting and approval on that end, but a really good opportunity for our young kids to get started farming with them.
Yeah, no, that's a good deal because um, it's hard for young people to get started with the amount of capital it takes to buy land. I mean, it don't, you're getting $1 million on less than 80 acres, and that's hard to do as a young person. So I have confirmed auction results and, talking to the auctioneer and I say, well, who's the buyer on that farm? And they say, well, it was a young farmer. He's using the young farmer program. So I do know people are taking advantage of that.
Good, good.
And, I get questioned a lot, when I get interviews from other news media, how does a young person get started? Well, there is a barrier in this. There's no doubt about it, but there is programs here to help. Do you see that ever getting changed or maybe in the upcoming farm bill? Do you think that'll ever change or do you think they'll add to it or any comments on that?
I would hope that the administration, whether it's the Trump administration or the one moving forward after that, I hope they continue that program. Obviously, the Farm Bill is a pretty big sticking point when it comes to legislation and all those changes. And crop insurance has been a huge driving force for our farmers out there. And I'm a huge proponent for that because it's a glorified put option out there that these customers can work with on that end with your spring price and your harvest price. And then they've even added some additional coverages on top of your 80 to 85% multi-peril up to 95% coverage for some of these customers. And it's subsidized by the government, but for a good purpose and a good reason on that end. But yeah, I think these programs, they need to stay out there. They need to happen because we've got a lot of young kids that, want to get started. And the only way that they can really, build up that equity and build that net worth is by owning an asset like land in Iowa.
Yeah, right, yeah, right. That for sure would help their equity position. So uh, now, as far as a crop farm, a typical crop farm in Iowa, how long is the term of the loan typically? 20
That's a
years or
good
30 years?
question. Typically, It really kind of depends. If somebody were to call in today and I offer them a loan, I would say 25 is kind of our standard as far as policy. But I've gotten to the point now where, um, we talk about interest rates and, do you want to lock in something longer term? But at this point in time, I mean, you look at the numbers and it probably makes more financial sense to lock in a shorter term rate, if that makes sense. And then if rates were to drop, we can modify, we can change those rates at that time. And then my next question to my customer is, we can offer you a 25-year amortization, but it's locked in up to 5, 7, or 10 years. But what's your purpose here? Are you planning to keep this farm for a long time? Are you wanting to mitigate your risk and lock in a long-term interest rate, or are you one of those guys that's really aggressive and do you want to pay it off sooner? And I've had a lot of my customers recently say, I want to pay this loan off as fast as I can, and I'm willing to amortize it over maybe a 15 or even like a 10-year amortization. Now, your payments are a lot higher, but by doing so, by locking in a lower amortization, so instead of paying it off over 25 years, now you're paying it off in 15. That's an advantage to the bank on that end, and we like that. So I'm going to give you the benefit of the doubt and give you a better interest rate.
Right.
So you always kind of got to figure out what's the motivation behind buying this farm. Um, some people it's a long-term hold. Some people it's something to play with. Some people want to mitigate risk and lock in a really long-term rate. And some guys are saying, hey, you know what? I've got the cash to turn and burn, and I want to take this thing off as soon as I can. And honestly, move on to my next farm and buy that next one. So there's a lot of that going on.
Yep. 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 As far as like a rec farm, which, as you know, there's some farms that there's no income, zero income on it. Now, how long would term would typically be on something like that?
It'd be similar. I mean, we can amortize it over 25 years, lock the rate up to 10. Um, but at the end of the day, a lot of these, W-2 wage earners, people that have enough income to service their debt from their day jobs, that's how I can underwrite that deal. Um, so as long as they get enough money that they make, working 8 to 5 to service that debt on the farm ground, then we're good to go. So it's kind of a it's kind of tough to make things work on a cash on cash return right now for farmland to begin with. So there's a lot of moving factors at play, obviously. And we like to look at the whole global picture. Obviously, does this farm work on a standalone basis? Probably not. It's not going to show a cash on cash return or a positive cash flow per se. So how are you going to service that debt? Is it going to come from other income? Does the wife have a job? Is it off farm income? Do you have a part-time job as well? So, we look at everything globally from that perspective. And when it comes to the farmer types, obviously those guys are going to operate the farm. They're going to own the property, and they're going to have a better return on investment on their end because they're the ones getting the higher yields. Obviously selling the crop on a per bushel basis, and they can make more money that way and get a better return. But it's getting harder and harder these days as far as showing a standalone cash on cash return for farmland. What kind of return on investments are you seeing, Jim, on a standalone basis for some of these farms?
Oh, they're down to 2% range. Um, that's very common. And back when interest rates were down in the 3% range, that was everybody was okay with it because the money markets and CDs were less than 1%. They're like, well, this is still better than what I could do in the bank. Well, now money markets are 4% or maybe a little higher than that, and
Yep.
um, so interesting stuff. Now, but do you do any machinery loans, or is it just strictly land for you, or how is that, Josh?
We're a full service bank, so we offer everything we can for our customers, operating loans, machinery loans. I do quite a few hog barns
Yep,
from
yep,
that perspective. So work with quite a few customers with contract feeding agreements with integrators out there in the state of Iowa, which has been as inflation goes up, so does construction costs.
yep,
So
yep,
our return on investments on those are not nearly as good as they once were,
yep.
and it's kind of tough to kind of cash flow a newer barn these days with the price of new construction. As far as machinery loans, yeah, we definitely do a lot of those. Um, when I first started here, I did a lot of it's called fast track financing. So we'd work with the dealers that would refer us business. Um, it's the same thing as the farm credit system out there that they have on their end as far as financing equipment. So typically terms on those are anywhere from 5 to 7 years, 15% down. And our underwriting on those are pretty simple and easy. But rates have obviously increased significantly over the years. I'd say we're probably closer in the sevens on interest rates for machinery right now. And those, you've seen the cost of iron. It's
Oh,
gone through the roof right now. It's
yeah.
crazy.
Yeah. No, that cost new is just something else. Hard to believe. I had to have my car fixed here not too long ago, and I was walking around on the dealer lot looking at new trucks, and man, there's stuff are right at 100,000 or over 100,000. I just couldn't imagine that paying that much for a new truck.
These
Um,
tariffs might be making them go a little bit higher too. So
yeah, yeah, for sure, for sure. If there's a week, he's talking about the hog production here. And I know I've praised a lot of stuff for you as far as hog finishers and stuff. And that's probably one of the weakest areas in Iowa right now, probably all over the country is hog facility real estate. I talked to a specific realtor that but man or specializes in hog facilities, and they say, man, those older facilities are hard to sell, and they might not get them sold. Um, and so you want to comment on that some? How's your borrowers doing, and just elaborate on that some.
yeah, it all comes back to that contract. Some of these integrators out there, I mean, you've looked at the income they get per space, and it hasn't moved in quite some time.
Right. It's been
It's not really an
stale.
incentive for these integrators to pay any more than they need to. And I even had some customers back in the day that they were offered triple net leases. So the labor and the management was taken care of by the integrator, and it was a hands-off transaction. I own the asset and I pay the debt and I pay the taxes, and it's paid off in 10, 12, 14 years and we're good to go. But like you said, there's a lot of those older barns. Either they're sitting empty, they need a lot of repairs, a lot of work, and they don't have any contracts behind them. So I feel kind of bad for those guys that are feeding their own pigs, because this market has really hurt them in the last 2 to 3 years. Those crush margins have gotten kind of tight. The price of corn went way up. The hog market kind of dipped there a little bit, and they were kind of bleeding some cash there for a while.
Yeah.
But yeah, if you can find a used barn for a reasonable price and it's in really good shape, and again, the key is that contract. It's that paper behind the integrator as far as locking in a 7, a 10, a 12-year contract on that end. And a lot of those, I look at a lot of those, but man, those are really hard to come by right now as far as good deals that show really good returns on hog facilities.
Yep. Yep. Well, I know there's some people exiting the industry because the past 2 3 years have just been too tough, and so we're seeing some consolidation and but I think what I'm hearing now that there is some profitability coming back in the pork industry, but they've got some healing to do. So for people to start building new facilities, they've got to heal up, and it's going to take some time. And
Yeah,
you start pouring that concrete and buying steel, man, those costs just get astronomical right now. So hopefully we can that those costs will come down and start getting some new facilities built, and hopefully those payments will go up. I'm hoping we can get some more export demand for pork and more demand for pork and get some profitability in that industry. Because if you don't have profitability in that, there's nobody, and the young people won't be interested in it. So, um,
100%.
can you speak to the cattle industry, man? Those cattle prices are skyrocketing. They are as high as they've ever been. How's your cattle producers doing? You want to comment on that some, Josh?
Yeah, I mean, they're rolling in the cash right now. So it's been a good last 6 months to a year for our cattle guys. And yeah, I'm trying to think when the last time that happened. That was mid 2010s, I want to think, about 10 years ago. They had a nice run up in prices there. So it's cyclical, obviously, based upon the cattle market, but those guys have made a lot of money these last 6 to 12 months. And it's kind of hard, you know what do you do? Do you have a cow calf operation, and do you want to grow your herd? Do you want to buy more heifers? Do you want to keep back some of your own herd? Do you want to grow your herd? Do you want to buy some? So it's kind of a tough time right now because the cost to enter into that market is it's pretty high in my opinion.
Yep.
And I've got a few guys that background some calves, and you can hold them for 3 to 6 months and make a little bit of money here and there. Um, if you can get your average daily gain up there and you can feed them in a quick period of time. But yeah, those guys have made a lot of money, and hopefully that market continues to keep driving up. And there's nothing better than a nice steak, that's for sure, Jim.
Yeah. Well, what surprises me, I look at the cost of beef at the meat case at Hy-Vee or wherever I'm at, Fairway, wherever. Man, it's high. And I thought, man, it's gotten so high, the demand, people are going to buy other protein, but they just seem to shake it off and keep right on going, which is shock to me.
This time of year is great for those retailers when it comes to meat. It's grilling season, so your bratwurst and your steaks and your pork and your beef is in high demand right now. So that's a good time to be buying.
Yep, 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 yep. Now, Josh, if now if you have a new borrower, do you go out to their farm and look things over, or do you do just all office stuff? Can you kind of talk about that?
That's a great question. I'm glad you brought that up. So, my goal when it comes to any of these transactions with my customers is to obviously meet them in person. Some of my guys are out of state, so I've never actually been able to, shake a hand or see them in person. We just do everything electronically these days. But if they are in the state of Iowa, there's a highly likelihood that I'll see them in person, and B, I'll see their farm as well. So I've got a mortgage or have had a mortgage in, I think, 70 of the 99 counties. So I spend a lot of time on the road, and I like to see that transaction and that farm that they own and that we have a mortgage on. And I like to see them in person as well. But in this day and age with underwriting, they can send their financials electronically. We can get everything done over the phone. But when it comes to the closing table and getting things done at that closing time, I like to see them in person. I like to see them out in their farm. So spend a lot of time in the truck. I would say I usually put on anywhere from 20 to 25,000 business miles on a year, sometimes 30, um, all over the whole state of Iowa. So
Yep.
it's been good. I like to get out and about and see those guys.
Well, you're a busy guy. There's no question about that. Let's just we need to be wrapping this up just briefly. What's your thoughts on the tariffs and all the news that we're getting right now? Can you just speak to that?
Yeah, that's a tough one. Trump's obviously trying to negotiate with these different countries out there to, you know, to get those tariffs and those imports taken care of with especially China. And that's a big competitor of ours that we want to work with on that end. And that really affects our soybean market and our hog market, obviously. They're big buyers of both those products. Um, but yeah, I think it might hurt us in the short term on these commodity markets for the time being, but hopefully long term we can get some deals done here where it'll help our farmers down the road on that end. But yeah, that's a tough one. We might see some consumers might see some higher prices here for the time being, but hopefully long term it works out in the end. So what do you
Yeah.
think, Jim?
Well, I think we might have some short-term pain for long-term gain. I think that's where we might be. But the land market just seems to be shrugging everything off. It is just rock solid. And what handful of cash rent auctions I pick up, those were just rock solid as well. I didn't see any weakness from the past year or two in cash rent auctions. And so some of those were 3 to 5 year contracts. And so that tells me those guys were pretty dang optimistic for the next several years. So where do you think what do you think land values are going to do short term and then long term, Josh?
Yeah, there's a lot of factors at play, and like I said before, I think those high end, top level, grade A, really good farms are going to sell for really good money. That's no matter what you're going to do, whether it's a listing or an auction, those are going to sell for good prices. So your below average farms might, dip a little bit as far as maybe a 5 or 10% dip on that end. But then you get into that recreational market again, where those guys are continuing to keep paying high prices for high stuff and pay good money for it. So I think if anything, if it does go down, it'll probably flatline or plateau. But it'll probably pick up right again this fall. And, it's seasonal. We see a lot of land auctions in the spring and the fall, obviously before and after harvest. And you mentioned it earlier as far as our customers in 2024, maybe interest rates were high, maybe commodity prices were low, but they had fantastic yields. So, there's still a lot of good cash out there and a lot of well-heeled borrowers and guys with some strong balance sheets that are probably going to continue to keep growing their operation if they can.
Yeah, yeah. Well, that's something I always say. It's the local producers that drive the markets. There's some investors out here, and people define investors different. We have a lot of investors that have local ties and they're willing to pay as much as a farmer is for a farm. And we also have institutional investors. They have more of a disciplined approach to buying farmland. But those, investors with local ties, they'll compete right with those farmers and just, you know, keep that market up high. So yeah, yeah. Josh, if somebody wanted to borrow like $10 million or $1 million, how would they get a hold of you?
So I'm located in Clive, Iowa here, right across from Stivers Ford. If you get off the interstate at Hickman Road Highway 6, which actually that exit's closed right now,
Yeah.
but
Yeah.
we're about 3.5 miles west off the interstate. We got three locations in the Des Moines metro, one in Polk City, one in Norwalk, and one in Clive, and then three in northeastern Iowa. But yeah, just go on our website, luanasavingsbank.com. I think my phone number is actually on the background there on that
Yep.
end.
Yep.
And then as far as capacity on, dollar amounts, with our size of a bank at 2 billion in assets, we can lend up to, I think, $32 million for one individual. So as you grow your operation and you get your asset base up there, we can grow with you.
Yeah. No, that's cool. That's good stuff. One thing I forgot to tell you about, Josh, is I've talked to several realtors and they're out of inventory to sell. I mean that kind of is telling that what inventory they had, they got it sold this spring and winter, and now they're out. But they're telling me, we're getting a lot of phone calls for fall auctions. So hopefully
Good,
that'll come to fruition and
good,
keep those transactions going. So,
good.
well, Josh, thank you for being on Land Talker TV. I'm very excited that you come on, and you are one of the most popular ag bankers in Iowa. And I know you cover a lot of counties here in Iowa. I didn't know. I think you said 77. I didn't know it was that many, but I figured it would be a large amount. And so thank you for being on the show today.
Thanks for having me, Jim.
You bet, you bet. Well, this is Jim Rothermich, Iowa Appraisal. I'm known as the Land Talker. I have a newsletter that goes out once a month that has all the land auctions results in Iowa, plus some narrative. You can go to www.iowaappraisal.com. It's a free subscription and you can sign up and it's delivered via email. I'm also part of Land Hero, and that is a website where you can access my sale database and pick up verified sale comps. And that's starting to be important now because we're getting a lot of sealed bid auctions and that are one chance sealed bid auctions. So if you want to see what the market is in a county or a couple of counties, then that's a resource for you to access. So anyway, well, thank you for listening and watching. And one other thing, the next interview I'm going to have is with Senator Chuck Grassley. So be looking for that. So I'm signing off and thank you so much, Josh.